Jack it up. Jack it up.
Okay. Do some quick check. So, okay, weekly rejection. Let's mark this off. So this means DXY could go into sells, which means we want to look at some of the other pairs accordingly. We do have a scope of jumping up. We don't have much news. Let's look at daily. Based on daily, it looks like a flag. On DXY. Kind of like a pennant, which means the daily is giving us an indication of a possible push up, while weekly gives us a indication of a possible drop. So what we want to see is doji here on the weekly, take the body of the doji, and we want price to create support here next weekly, so maybe a couple daily closes above 103.64. So we see a closure above, we can expect price to keep jumping up. We don't get that kind of a closure, then we are eventually going to make that drop down, right? But what does that mean? What kind of a drop are we going to see? This is the channel that we are forming at this moment in time. Okay, so if price continues to drop, this is ideally what we would see. If price does not break above, then we can expect price to take a dip here and then possibly make that jump up. All right, that is my expectation on the weekly. Let me post this into Discord. So DXY next week looks bearish. If daily forms support above 104.64, we can expect a breakout. Right, that is DXY. Now, based on this, now let's look at weekly, sorry, daily. Okay. Let's jump into gold here. Hey Casper, how's it going? Yeah, sorry, I've been traveling. Generally, every year around December, I tend to fly out overseas. I spend a couple months, maybe 3 months, traveling, enjoying life, as it seems, because end of December and January is mostly not that great. We don't see a lot of movement. We don't see a lot of, let's say, trending um, trades taking place. So, on the move, if there's a swing trade that I've been looking at for days and weeks, I'll take those trades. Otherwise, I'll just leave it running, and whatever I can catch when I'm seeing the charts, I will. Otherwise, I won't trade at all. That's what I generally do during January to, well, kind of up until end of February. So I'm still traveling right now as well. I'm going to be traveling through Asia and Middle East up until March 21st, and then I'll be back in Canada after that. So yeah, happy to be here. I'm gonna try and be around as much as I can in the coming week. But yes, that's DXY. Let's jump into gold now. So gold is taking a dip. Now I don't have a great top wick today. We've had two dojis back to back. We are currently consolidating, and you can see the consolidation, what I spoke about. So you can see that end of December, we made a jump. That's the final pump that we saw. Then we started taking a drop. This was the retest of the initial push up. And then post that, we've settled in around the range of 2023. That seems to be our median range. And that range has been established since early Jan, that is end of December onwards. We've only seen 1 day worth of real movement in January, and everything else has just been a consolidated move on the daily, which is what I tend to try and avoid during this time of the year, right? Consolidations are good, I guess, for scalping, but it's high risk. So you tend to lose a lot of pips in stop losses, and you can't really catch swing or day trades. That's what I generally trade in. We don't target those 10, 20, 30 pips ideally. We're always trying to target 100, 200, 300, even 1,000 pips in a trade if the market allows. So for example, we took sells in this range, and in this range. I'm still holding my swings up right there. I got stopped out. I re-entered. Still holding those sells. We're holding buys since 1810, so that's a long swing that we've been holding. Um, so we took buys in this range. I'm still holding those buys. Well, let's see what we get, right? It can be a complex market to trade in during the time of the year. So have we formed a possible trend? On the daily, there doesn't seem to be anything. So this is what we should rest on, right? We haven't necessarily formed a bearish trend yet. We've just formed a consolidation. So when market creates this kind of a consolidation, I said that I am expecting market to tap into 2075 once again, closer to it at least. We did jump quite a bit close to it. I think we can still make that push up. Why am I expecting that? Let me talk a little bit about that. I mentioned that in Discord. So we see this area here around the 2070s and this area here around the 2080s. Since we are saying that the market should have the potential of jumping all the way down into the 1810s once again to fill out the gap that was created due to the war, if you're saying we want to see that happen, that means price has to clear out some of these imbalances that it has left at the top. You can see that as a part of this consolidation, market has constantly tried to come up and clear out those imbalances, pushing up, rejection, went further down due to this double top, price coming back up, reaching a little bit further higher, coming back down, but now it's not going lower and lower. If you can see, it's not necessarily creating a new lower low. It just seems to be ranging through it. So till price does if you're trying to take a good swing, and if you are a professional trader or you're trying to be one, this is what you ideally want to see. So we kind of have 1, 2, and 3 touch points, and then a fourth one trying to go further down. You want this move to drive down, break, retest, and then continue down, which doesn't seem to be happening so far. What is happening is on the H4 is this thing here. So you can see that we are in a kind of asymmetrical triangle. Let us consider this move here and this move. So now this makes it even more difficult to trade because on the 4-hour you have a symmetrical triangle, which means price is not going anywhere. Which means this is more likely. Why is this more likely? Symmetrical triangle ideally means that market has not made a decision, right? But how do I like to look at symmetrical triangles is what side of the move is market constantly trying to tap into? So we can see that price tapped into it once, right? Because of earlier rejections, we do 2 times. This is the 3rd time we rejected. We dropped down, but we did not drop down and break below the previous low of 2001. We did not break below 2000 yet, which means price had stayed above. It has tapped into it twice in a range, whereas at the top it's already tapped into it once, twice, and thrice. So this 3rd tap, if it does not break down, ideally it means we are going to go up. So this is how I generally look at my expectation. So I'm already expecting market to clear out this imbalance, expecting market to clear out these imbalances. Now, I'm not trading based on an imbalance, I'm trading based on trend rejection. So when price jumps up, actually establishes a move, which could be, this could also be a possible trend line. So price now jumping in, this is what I want to see. Is it actually going to reject into this range? This is where I could expect a swing drop towards the downside, which could be a longer trend. If not, then there is still no trend that has formed, which means we continue to consolidate. So let's look at the weekly. and expand the weekly and identify my analysis. So if you can see on the weekly, what has happened so far is this here. Right, this is where we are currently in. And pretty much a weekly symmetrical in a way. So the next weekly has to take a decision as a part of this as to what direction it's going. If I was to consider it to be this, ideally we broke out, haven't necessarily retested it, so we could come down, retest, and go up. So trend lines make it a little bit tricky, right? Going back into, let's bring back our trend lines. Go. So obviously we haven't formed a downward trend, but are we in an upward trend? Ideally, if we look at it, we are still holding on to that trend here, but barely, right? This is the daily trend. We've tried to break below twice, which is a good sign, which means we are ready, almost ready to take that trip towards the downside. But we're still not there yet. We haven't generated that kind of a momentum yet because we don't have that kind of news or economic situation that is going to give us that. Plus, we have elections coming up in the next few months within US, which means that during that time, we could see some decent amount of consolidation. Doesn't matter who wins, if the administration changes, say if the Republicans come into power, what that means is you might see a bigger movement coming in. Post that, you might see more volatility coming in after that. What happens if the Democrats win? Well, pretty much you're still going to see some movement, decent amount of movement, because there's changes, there's promises that have been made. Now the expectations and the movement around gold will be around those promises. Doesn't matter who wins, right? That is pretty much what we would expect to see at that given point. So till then, we will see a lot of consolidation coming in the next few months. So every election year, this is something that happens on most pairs. Okay. Right. Um, so when we are trying to get into a swing trade, number one thing you want to look at is the fundamentals. Technicals give you a forecast of what to expect fundamentally. Now, look at the current wick. We dropped down, right? I got a bunch of messages because I kept on saying, buys is something that we are looking at. And I got a couple of messages from people say goodbye to buyers or something like that. Sellers are coming in and it's now going to be selling time. And well, that was about the time I was jumping up. But you can see that the price just pumped back up. Mainly because we're consolidating, right? It's not because I'm expecting buys or you're expecting sells. It's consolidation. It's a no trade range. When you have a 1 hour structure like this, you ideally don't want to be trading it at all because these are movements. So there's two ways people trade with this. Now see, we're about to break out. How would you trade this? Well, number one, you only want to trade it if number one, price breaks above this structural consolidation, right? It's about to break through. Then you look at 4 hours. 4 hour structural level is right there and right there. So you can see the price rejected into that range once. Now price has almost broken above that. Now you could possibly look for buys, but right now you want price to close above. It hasn't closed above yet. You can see price is rejecting at that 4 hour range. So how do you take this trade? Well, you wait for price to break above, close above, And if price creates support at that level is when you can expect price to keep going up. Till then, you wait, right? It's a waiting game till then. Again, these are, for me, these are scalping trades. Even if I get an entry here, this is, I think, the range for the day, 70 pips above there. But we've already rejected that range. Second range that you can find an entry in is look at this trend line. Right, let's make it accurate. So this is our trend line. What you could expect is a little bit of a consolidation, a probable drop and mitigation of this imbalance right there. Which means when you're looking for buying opportunities now, you want the next one to open up. You want to see if price taps into the trend line there, or does it just keep on driving towards the side? Because it could find more power once it mitigates this imbalance and then pushes up. Right, so this is one way of taking trades on a breakout, is you wait for this position to happen. And how would your stop loss be? Well, clearly there is a structural support sitting right there. So you have a 31 pip stop loss right now. This would be 2030. So let's pull it up. So 28, 27, 28 pips, let's call it. 28 pips is a decent amount of stop loss. We haven't closed above. See, this is why I wouldn't enter a trade. This is consolidation. Now, certain traders that trade based on the manipulation concept, which means they believe or they strongly believe that these markets are extremely manipulated, and this is what they would call as a SL hunt, SL hunt, SL hunt, and so on. Clearly consolidation, right? Ideally, you shouldn't be trading this kind of a structure at all, but you call it stop loss hunt because you took a bad trade. You entered a trade midway. There's no clear entry. So if you look at 4 hours, you have a decent amount of entry. Now you can call this entire structure a demand, a strong level of support, or whatever you want to. But if I trade based on swing ideas, and my swing idea tells me I need to look at the daily. So when I look at the daily, I have a possible entry structure in this range, but at the same time, I have a lot of bodies there, which means because there's bodies in that range, I don't want to be taking a buy entry in that range. Even though I have supports, I have closures above that range. There's not enough closures or bodily closures above that range to give me confidence that this is a safe entry. Which means what could happen? So what I'm saying is, so say this is the structure that we're looking at, right? Let's use a proper line. So this is where price took off. Now, you know, there'll be people that have taken entries on 5-minute, 15-minute, 30-minute, which is fine. Scalping, again, that is how they're trading that. From a swing trading perspective, the way I would be looking at it for a setup is I want to see maximum amount of bodily closures above this line. What do I see? I see bodily closures close to it, right? So let's pull it down. Okay, so we have bodily closures there, but everything else is either below it or right on it. You don't have as many bodily closures above it as you would like, so that is not a good entry. That is where you know that it is part of a consolidation entry. And in such trades, I don't like to be stuck in. Right, so that is the principle of getting into a swing trade, at least from my perspective. Now, what has happened? Price jumped up, tried to break out, couldn't make that breakout. How would you trade the situation? Well, you still gotta wait. The next 1 hour could push up. The 1 hour after that could push up. You don't know. Ideally, it's Friday. So core concept of fundamentals tells you that Fridays are generally retracement days. So I call it retracement Fridays. So if you've had a bullish week through Monday through Thursday, or at least the past 3 days, so Tuesday to Thursday, if you've had a bullish move, most of the times, Thursday, if it doesn't have huge news is coming out, that Friday you're gonna see bearish movement coming in. You're gonna see retracements happening, and I've been saying this for the whole year, and a lot of people that are associated have seen that happen. So it's not something that I'm saying; it's just out of experience. That's how I've always traded Fridays. So I would have expected retracements, but today, what is the retracement we can expect? Yesterday, consolidation, a little bit of a movement down and then back up, back into that range. The day before, Similarly, pushing up, coming back down, back into that range. The day before that, jumping up, starting that range. So we haven't necessarily escaped out of that range. You can see that we dropped out of that range, back into that range, dropped above, pushed above that range, back into that range, again dropped below that range and back into that range. So we're still consolidating, and this is where you don't have great opportunities. Otherwise, we would have been taking trades left and right. Okay, uh, let us quickly look at. Let's see if we can find some good positions. So what I want to do is I want to look at it not from today's perspective, but from next week's perspective, right? So let's clear everything off and let's do a real setup. So like I always do, I'm going to look at this. The wrong. So see, selling opportunity, weekly rejection. I took sells there. So we have a few selling positions sitting there. We have selling positions sitting here. Let's look at more structure, right? And let's look at only monthly structure. So I want to remove this. I want to take this up. So there is bodies there, monthly support, right? And we have a doji sitting here with a margin of error on the monthly, which means this is an area that we could see a decent amount of consolidation. Which means, again, if we are consolidating into this spot, we could pretty much get stuck here. So you don't want to be taking too many buy entries and too many sell entries in here. Obviously, we will trade based on the daily and the weekly, but on the monthly, if we are seeing this kind of for this becomes a high risk zone. So we want to be taking some risk management in those spots. Now on the monthly, on the RSI, what I can see is we are still above the moving average line. We are about to break through it, or we might take a support and breakdown. Well, ideally, we did take support into that range and then eventually pushed back up. Now we could definitely take a drop down. We don't have enough market structure in this range to keep going up. That means now this time when we drop and we come back up, we can expect price to keep jumping up. So 2024, maybe end of 2024, 2025, we might be seeing another new high coming up. Now, based on the monthly, this is the monthly bullish trend line. So far, we have 1 and 2 touch points. We could possibly see a third one, which given the current month, definitely we might not see a huge drop. Previous month is giving us a sell signal with a possible hanging man-like structure within that candlestick, which ideally means we would see rejections coming in. So price jumping up, rejecting at a previous monthly trend line, and then starting its descents, but it doesn't have that kind of a momentum yet, mainly because we have broken above, even though we never got a closure above, we did break above. So we still do have a scope of pushing up and probably trying to fill that wick. There's a scope there. So if there is an economic event that happens to create some amount of push, if you see bullish movement coming up and breaking above, you could possibly see price jumping up. So that tells me that on the daily, I need to be prepared to be able to take buying opportunities right above this range all the way up into 2150s. So that is one range that I have on the monthly. Plus the RSI is telling me if price breaks below the yellow line, which is a moving average line, that ideally means, so as you can see, based on this bottom wick so far, we have tapped into that, but we don't have that kind of a news to keep pushing it down. We are definitely, like there's a 80%, 90% chance that we are going to see February be bearish, the beginning of the bearish journey. But I believe we might see a eventual push up to 2075. Now, if you look at the monthly always, if there's a hanging man pattern, um, uh, 9 out of 10 times you will see the next candle retesting the previous signal. If this is giving us a hanging man sell signal, ideally the price has to push up and try and break its top, which it might not be able to. 2075 is right below that, as you can see, which means price rejecting in that range could take it back down. If price was able to break above, or if not able to break above this candle but close above this trend line, it could still find support and push up. So there's two things that you want to be tracking on the monthly. So end of every month, you want to see where the monthly has closed. So when January closed, I mentioned inside of Discord that we can expect sells now. So you see a push up in the next week, you get that, you take a sell, and then eventually we saw this push up, and I re-entered into sells in that range. Now, we could still find strong monthly support into this range, which is, as I said, area of MOE, doji there, right? We have a bit of a structure sitting there. We have not yet broken below 2002 or 2000, which we should be able to. But that does not mean that we are going to keep breaking down, right? We might see some rejection in this range. So the next monthly, again, has to create a top wick, right? We're definitely going to have a top wick. So price could come back up into the 2000s and then eventually keep breaking down. And then you might see a little bit of a struggle here into the 1940s, 1920s, where price would face a decent amount of struggle. So it might have to come back up and then eventually break through this trend line towards the downside, right? Because we only have two taps. So the third tap could definitely be powerful. So let's see. Weekly. So given the facts that we have on the monthly, what's the trajectory that we see? Let's look at the RSI first. So I don't like to look at the RSI from the overbought, oversold perspective. I like to monitor the 50% line, the moving average line, and the position of price. Price broke above, right? Retested the moving average line, and then went bullish, right? So you have decent amount of scope to expect where price can keep on going bullish. We took a lot of buying opportunities just based on the RSI. And obviously market structure giving us additional daily trading opportunities, but swing trades we've taken base off of these. So price jumping up, now it has broken below, right? And it has completed a retest. So the last week has given us a retest as well, which means now we should be good to take a decent amount of drop. We haven't yet taken a drop. We have just consolidated here on the weekly. 1, 2, 3. Let's call it 4, 5. 5 weekly candles consolidating. So start of Jan, the entire Jan we've just consolidated, which is that hanging man candlestick that we are seeing on the monthly. So the first week of Feb obviously giving us a good structural opportunity. Next week of February should be able to, we might be able to see a drop below 2018 and a closure below 2018. Given the weekly structure, this is ideally what we want to see. We want to see a break below, retest, and then drop. So we might still see some pushback from this range back into that area and then drop. All right, so this is going to be my expectation for the upcoming maybe 3 or 4 weeks. This is my market structure expectation. And now what I will do is once price breaks below, I will set up pending stops, pending selling orders in this range, around the 2017 range. Once I see a good break of 1966, I will look for retest opportunities for sells for price to keep going down. When price approaches the trend line, I will look for buying opportunities because I have a basic trajectory of end of March, where I can expect price to tap into the trend line. So now what I would do on my charts is ideally I will take buying opportunities in that range. Which, how do you identify a good range? Well, mark off the dojis and you have a good range. So 1924, 1919, 1918 range. This is where I would expect price to say dip, maybe jump up. I would expect it to jump back up into this range here. So let's look at this and then eventually break below. So this is my expectation based on the weekly, and then obviously we'll take selling orders once we see more of a structural drop. Okay, so this is my long-term game plan for swing trades. So these would be trades that I will hold for weeks and months. So this could be like I'm already holding this trade for how many weeks now? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks. So we have one swing trade for 10 weeks. We have another swing trade for like 5 to 6 weeks. Another swing trade ongoing for now, second week. So there's a bunch of swing trades that we're taking. All right. Okay. So I have a weekly structure I'm looking at for buys. Daily structure, I would be looking at let me take this off. Go back to the weekly. We have bodily closures below, trying to break above, rejection in that range. So this is going to be my rectangle tool. Here. I ideally want to extend it all the way up into this doji here. Okay. So let's look at the daily now. We had an imbalance in that range that we drew based off of the weekly, and you can see that price tapped into that range, cleared out that imbalance, got rejected, came back down, took support into that range, came back up, broke above, rejected again at the same level, then jumped back up. So now you have a good structural understanding of what market could be willing to do. We went back down, created a morning star, eventually price pushing up, and then rejecting again into that range. So fantastic. Now let's see if we are forming any channels. Weekly, definitely we are not. On the daily, nothing either. So let's pull in that trend line that we were looking at. This is 1. We have 1, 2, 3, and 4 touch points, 5 touch points so far. So you want to see a break of that trend line, sell below that. Safer sells, you want to see price closing below 2017. But on the weekly, again, you have this as a rejection range. So based on the daily, because we have that as a rejection range, I would extend this range into this doji, where we can see that we have multiple dojis and rejection ranges on the daily for that level. So I'll remove this. I'll put in this. Please support. And this is the doji range where I would expect some amount of price pushback or pullback into the upside. Which you can see that on the daily has happened multiple times, right? Has created a decent amount of support in that range multiple times. Let us extend this range. There you go, right? So that is a good range to look at. Fantastic. So this is where I'm going to expect some amount of a rejection coming in. which means I'm going to look for long-term buys. Could go for 35 pips, but since I'm going for a swing, I'm going to go up to 47 pips. That's fine. So my sweet spot for gold is 45 to 48 pips is generally what I will 40. Well, I like to go 40 pips ideally, but not every trade is ideal. And since it's pending orders, I want to keep a little bit of a room given the levels price is currently sitting at. So giving volatility some scope. Another thing that I want to see is this cross loop. So even though I get into this trade, doesn't mean that we're just going to keep going down. We could still take support here, which could be the fake out of a fake breakout, let's call it, towards the downside. Price could tap in and then jump back up. So I want to be monitoring that. So let's clear it something else. There we go. So now I have a space to monitor when I take this trade. So I will take this trade once price breaks below. And my stop loss can actually be right above this range here, which is the rejection range right there. So right there, 45 pips. Okay, so this would be a good range to take a sell entry. Now at the top, if I want to take a structural buy, this is where I would be looking for buys ideally. So I want a clean closure above. So I get a clean closure above. I will take this trade, right? 251 pips, 415 pips. But let's spread this across take profits. Now, some of you guys are new to the stream, so I just want to say I take partials along the way, so I don't try to collect the entire trade. I don't hold it for that long. I will have maybe a couple take profits that are my bonus trades. I have a hedge account where I'm holding one single trade for a very, very long time until I find something else to replace it. So I tend to hedge a lot of those trades there. I like to use the power of compounding. So I don't like to withdraw all of the funds. I just like to keep growing the floating profit and then play off of that. So I'm never risking my capital realistically. Okay. This is going to be my expected push up. Yeah, this is going to be the setups I would be looking for. Put this into Discord. There we go. We have a trend line sitting above. I would still look for a closure above in this situation. I want to see a clean closure above. Yeah, that's with gold. Now I'm going to look at, I've not been looking at a lot of pairs for the month because the first month I ideally try to avoid taking too many pairs. Let's see, what pairs can we look for? Okay, I've not looked at JPY for a long time. Let's look at JPY basket first. The JPY is back doing its thing, going bearish again. Couldn't find a break. So this is what I want to see on JPY first. Before I look at any JPY trades, this is ideally what I want to see. This is coming in next Tuesday, which means I want to be looking out for this. Previous was negative 0.7, so I think the growth rate, the GDP growth rate is coming back up, I believe. So we could see some bullish pressure come in next week. So yeah, I'm gonna avoid JPY pairs in the interim because look at the opportunity that presents us. JPY goes a little bit bullish, we'll see a lot of the other pairs starting to go bearish, which is ideally great. So yeah, I'll look at it at that point. I was looking at oil a few days ago. Oh, oil looks like it could go bearish. Or most of this year. Again, when there's US elections and, once the elections happen, we do see bearish movement coming up in oil. So, yeah, there is an expectation that Trump could win the elections. If he does, I think oil could definitely take a hit. So that's going to be a fun one to see. Right? You can see that it's barely able to survive that trend line drop. It's going to be a fun one. Let's look at the daily. Tap 1, 2, breakout, retest, and then tap. So we should be good to start going bearish soon. So if you're trying to take and the daily is about to give you that signal. So if price closes doji today, next week you want to be looking for those sell entries. So So why am I looking for, and why am I saying sell? It's because the next one has, if the candle closes this kind of a doji, with the body at the higher tip of the overall volume, then you can expect the next one to start creating a body half the size of this green candle here, which means we would see evening star formation. So the way I would take that trade is next week you might see a price trying to push back up a little bit, maybe all the way up into this trend line. So the way I would look for this entry here is a scope. Price could tap into that range, and then I would take an entry there. That is only if you get this doji closure today, right? So I would either take sells into that range. So it's on 4 hours. This is what you could expect price to tap into. Alternatively, you can see consolidation here. We are seeing consolidation here. So I would take a short position here. So on 54 pips is what I would go for. And monthly support. This is going to be the initial target before you can expect price to jump up. So this will be my first target. This is going to be my bonus based on the monthly. And then I would expect price to either tap into buys from here up to the trend line, or from buys from here up to the trend line and then come down, right? So right now, we're still a doji, hanging man formation so far. Based on how the current daily closes, we would have to look at it. Ideally, we have closed the 4 hour. Let's see what happens there. So if the daily closes doji, then we would look for possible evening storm pattern being formed, and then we would look for sells. Otherwise, if price breaks above this range, buys above. Discord. At this. We could definitely still go back up for that wick fill. But let's see what happens. Just that consolidation. Yeah, still not able to break below 2024. We break below 2024, we can expect price to close hopefully below 2020. Yeah, 2024 close, still not. Let's see. Okay, that is with oil. Let's see what happens with oil. Yes, I haven't looked at it in a decent amount of time. Let's remove this. Go to the monthly. Current monthly doesn't seem to have a bottom wick. We are in unknown territory. We don't have a lot of body there. Even on the weekly, we don't have anything much there. If price was to come down, this is the first level you should look for buying opportunities. Is price created price faced some resistance here, broke above, but never came back down to tap into that range. So when price does, which it would ideally, you can expect it to dip down into this range and look for possible buying opportunities there. Looking at the daily, this looks like the daily trend line so far. Well, not a trend line, it looks like a channel. This could possibly be the hurdle. So if you look at this, the structure of this channel seems to be getting narrower, which means that we are in a ascending triangle, so we could potentially see a drop. So NAS could be forming a possible ascending triangle. Let's consider this point and this point, and this is the thing, right? So we wait for a break, retest, and drop. Now this does not mean that we're going into a downtrend, okay? This just means that we might see that retracement and then push up. So just a temporary structural break. We might even mitigate that imbalance plus that retest. We might do that maybe even in a couple weeks and then continue our way up. So once we reach into that situation, we will look at this, or we keep pushing down, we break below, then we can expect this. Post this in NAS. That is my expectation so far. Okay. There's NAS. That's about it for now. The XY is not really doing that great right now. It's just consolidating, so probably avoid it. Looks like it. So it is kind of creating a support. So yes, we have a scope of pushing up. So the bearish scope of gold is definitely there based on DXY. I don't like to directly relate DXY to gold because sometimes they can move in the same direction. Fundamentally is what I would look for. Current fundamental situations tell me that we can expect that gold to pretty much fall down. I think we are uh, waiting. So we are creating support into that range. Looks like a daily flag in a lot of ways, but doesn't have that same amount of momentum there. So price breaking above, taking a retest again. If it's able to stay atop, we do that. Otherwise, current weekly, if you see it, it's not a pretty picture, which means that we could see a drop. So drop definitely likely to retest this moving average line, which could be along the lines of this here, this doji here, and then we could push back up. All right, yeah, that's it for me for now. I gotta get back, do my thing. But yeah, as always, if there's anything, feel free to ping me inside of Discord and we can have a immediate chat. Schedule some calls if at all we need to. I do meet a certain amount of viewers, so we do free. Everything that we do is free. Okay, it doesn't matter. I don't make any money off of you guys. The idea here is to kind of build our own community. I plan to create my own funded thing. Some of you might know, if at all. Once I do see all these regulation things working out the things that are happening with FTMO and my Forex funds. That is where I want some of these players or part of our members to participate in. So yeah, let's see how it all works out. But yeah, I will see you guys probably next week. I'll be uploading maybe a monthly forecast, monthly expectation over the weekend, with a overview of what's happened so far. And then next week onwards, I'll be around. I will try to be around every day, but if not, I'll be there at least 3 to 4 times a week. And I will at least try to share my analysis recordings. But yeah, sounds good. Have a good one. I'm in Discord, so feel free to ping me anytime. I'm gonna keep the stream running, so if you want to keep following it, feel free to do so. Have a good one, Pixie.